Healthcare companies are getting increasing attention during stock market volatility, which are caused by the tariffs announced by President Donald Trump. That's because healthcare companies have less price sensitivity from customers, meaning that if they increase their prices, customers are willing to pay these higher prices because these are necessities, but also because they're not in the direct line of sight here for the tariffs that are impacting many of the consumer products that are experiencing the biggest effects of these tariffs. So, understandably, these healthcare companies are interesting to consider adding to your portfolios. In this video, I'm going to look at Merck. I'm going to look at the big risks the company is facing right now. And then I'll look at valuation, looking at my proprietary discounted cash flow model for Merck to share with you what I think is a fair value for this business. And I'll also look at the forward price to earnings ratio. And I'll update you and let you know if I think the stock is a buy, hold, or a sell at current valuations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, let's start with the risks. And the biggest risk it faces is patents, right? Patent litigation. Merck frequently engages in legal actions to defend its patents against generic manufacturers, which can be costly and unpredictable. Furthermore, zooming out a bit, healthcare companies have been able to survive because of this intellectual property protection. They've been protected because when they do research and development and they find a product that's effective at serving and curing some disease or some illness, they can generate profits from that discovery because of the patent protection. If that patent protection was removed, if they weren't allowed to receive these protections, then the whole business model would become not viable. Why would you invest in research and development to create this product or discover this product, this cure, if you know you're going to be copied so easily and you're not going to be able to generate the profits to justify those massive investments in research and development, which are risky? You never know. And it's going to be one of the other risks I talk about. You never know what the outcome is going to be of these investments, if they're going to be successful or not. And so that whole intellectual property system is a big risk for Merck and investors who might be taking this as for granted that, oh, that's just going to be there forever. It may or may not be. Right. The next risk I'm going to highlight is regulatory compliance. Of course, Merck must comply with complex regulations worldwide, and they're different in every country, in every part of the world. And navigating this is very difficult to do. It's a core competency that Merck and other healthcare companies have developed. You've got to be good at dealing with regulators. You've got to develop that skill set. You've got to have the people in your company that know how to deal with this effectively. And it's still a major risk because one healthcare regulator may come in and develop a certain plan that hurts your company specifically while leaving your competitors unscathed. And so you've got to constantly be navigating these regulatory and legal risks as a healthcare company, especially for Merck. It's one of its biggest risks. And third, but not least, is research and development risk. So healthcare companies like Merck have very high research and development cost. If you take the healthcare industry more broadly and you take all of their research and development spending and you divide that by sales, the healthcare industry has some of the highest percentage of research and development spending as a percentage of sales. But it's necessary because that's how they develop new products, through research and development. They literally discover many new products by experimenting, hiring scientists and healthcare professionals to come up with and help them come up with new medicines and new treatments to help people cure disease, etc., etc. And your skill in this regard is going to determine a large part to the success of the company overall. Are you getting a good return on your investment from these research and development spending? Or are you striking out too often, right? Are you spending a lot of money in this category, while not delivering very many good results, while failing to find breakthroughs that result in big cash flow, which is not the case, right? Merck has been relatively successful in finding products that generate billions of dollars in revenue and profit. But there is no guarantee that they will continue with this success in future years. Keeping existing talent, being better than competitors, this is something that they must continue doing in order to achieve success. So it is one of their bigger risks. Right. So now that we've looked at the risks, let's look at valuation and answer the question if the stock is a buy. So I evaluated the company and I did a proprietary discounted cash flow valuation based on my own model that I created. And the intrinsic value that I found for Merck is $144 per share. The current market price is only $83 per share. So my calculations suggest that Merck at the current price of $83 a share is undervalued. And if you look at the history here, it's near its 52-week low. The 52-week low is $75.93. And when we look at the trailing 12-month price to earnings ratio, it's trading at a trailing 12-month PE of 12. So that's relatively undervalued as well. Whether I look at my discounted cash flow or the trailing 12-month price to earnings ratio, it looks undervalued. And then if I go to finchat.io and I look at the forward price to earnings here, it's at 9.21, near the cheapest it's been, going all the way back to 2016. So I've looked at 3 different valuation metrics, and I don't really count the 52-week low as a valuation metric. It's just the price performance number. But I've looked at 3 valuation metrics, which include my intrinsic value calculation, my trailing 12-month price to earnings valuation, and the forward price to earnings valuation. And all 3 point to a business that looks undervalued. Of course, I shared with you the 3 biggest risks the company faces, and that is by no means every risk, but I just highlighted 3 of the most notable risks. But even considering the risks, when I compare the valuation, the reward potential with the risk, Merck, I would rate the company, and I have rated the company on my spreadsheet as a buy. And so there are risks. Of course, with any investment, there are risks. And if anyone should tell you that one investment does not have any risk, I want you to run away from that individual quickly, because they either don't know what they're talking about or they know what they're talking about and they're trying to defraud you. There are risks with every investment. You just have to make a decision. Are you willing to accept those risks for the potential rewards? Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.